Good Thursday morning, Market Chameleons and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show with this man, Dmitry Pargamanik. How you doing, D?
Good morning, Will. How are you?
I guess things are getting more expensive, huh? Inflation is not being transitory, not going down.
Yeah, today what the CPI number came out. Looked like we're still in inflationary environment, like things are not easing that much. And now the market went from plus 1%, I think, in the morning pre CPI release to I think we're down like 1.5% right now.
Yeah. Well, before we get started, you want to start with the disclaimer?
Percent. Yep. So good morning, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we're not a registered investment advisor. We're not a broker dealer. We're not telling you what to do. We're just sharing ideas. If you need professional advice, call your registered investment advisor, call your broker. That's what they're there for, to give you advice, provide you with guidance. There's the disclaimer. And with that, let me share my screen. For today, we're doing just Q&A. If you guys have any questions, Market Chameleon tools, data analytics, you want to discuss strategies, couple ways to ask those questions. You can put those questions in the live chat on YouTube. Will's watching it. He'll read them back to me. If you want to come on a show and ask your question live, you could, we provide a link to Zoom. Click on that link. When you get to Zoom, click raise your hand. You don't have to turn on your video camera, but everybody will be able to hear you, and you could ask your question directly that way. While we're waiting for questions to come in, I'll start out with the pre-market report. We'll take a look at what's moving the pre-market hours, and then maybe what we'll do is take a look at in earnings. We'll take a look at one of our upcoming earnings report, earnings analysis. We are starting to come to earnings season. I think some banks are going to be reporting. That's what kind of kicks off the earnings season. So we'll take a look at stocks set to report, in the next week, and how those options look heading into earnings. Sound good, Will?
Perfect.
All right. So pre-market report. These are stocks that are trading in pre-market hours. We have our most active stocks, biggest percentage gainers, biggest percentage decliners. I see we got 54 stocks right now on our percentage gainers list, 316 on the decliners. So right now we are looking like a bearish bias at the open. And of course, we got that CPI number that came out, and the market is reacting to that CPI number. Basically, looks like it's going to be a lock-in of a 0.75%, 75 basis point increase when November 2nd. So we're not that far away from November 2nd, and potentially higher after that. We'll see what the Fed says. And the Fed has been coming out, by the way, and trying to signal to the markets as loudly and as hard as they can that we're not pivoting. We're not going to slow down. They're seeing issues there, and they're looking at, reports and numbers every day. So, when the Fed speaks, you should be paying attention, because it's not like they wait for the CPI number to come out and then they make their decision. They are looking at lots of different data every day, taking surveys, talking to businesses. They're trying to assess what's going on in the economy, and they're out there talking almost every day, and they're unanimous. And
it can't be helpful right now. I mean, every American who doesn't plug their car in but drives, a gas guzzling vehicle, the prices are up again. They're over $4 again a gallon here. That's a big, that input cost is huge into, inflationary pressure.
Yeah. And raising interest rates themselves and take in liquidity out, it could slow down the demand, but it doesn't totally fix the inflation problem. It just helps perhaps mitigate it, but it doesn't really fix it, because what you have is, and what we're seeing right now is that we got full employment, lower productivity, and we just cannot keep up with the supply of goods and services with the demand out there. And raising interest rates, what they're trying to do is just slow down that demand, right? They can't do anything on the supply front, so they're just trying to slow down that demand. And it could be a painful, it's not an easy fix. There is no easy fix to this. And I tend to kind of agree with what they said yesterday. They said something like, it's better to overshoot on the interest rates than to undershoot, because the pain of overshooting will not be as painful as if they undershoot and then the inflation just keeps going. That's what they're trying to do. They know already, and they're signaling to us, look, it's not going to be a painless solution. It's not going to feel good. It's going to hit earnings. I'm not sure why so far, and I think we're going to start seeing it, that there are going to be earnings revisions, because the earnings growth has, right now, at least analysts' expectations has not come down, where I think we're going to see negative growth. I think that we're going to start declining, and that would be, that will cause equity prices to go down more. Let's take a look at, I'm going to filter out this list to just S&P 500 stocks. So I'm going to use this filter here and drop it down, and I could select any of these ETFs in the list. So I'm going to select SPY, which is the S&P 500 ETF. And here we see 2 stocks made our percentage gainers list, 95 on the decliners. So overwhelmingly bearish at the open. If there are no questions here, I think what we will do is go to the earnings. And I'm just trying to look over my shoulders just to see where the 10-year treasuries right now sold off. So it does look like we are above 4% finally on the 10-year. Right?
Yeah, they're actually saying that 2-year, they're now projecting it over 5%.
Oh, is it? The 2 years over 5%?
Well, I don't think it's there yet, but the projection is looking out that it could get over 5%.
That it could get over 5%.
Yeah. Right.
And I'm looking at the 10 years kind of an interesting one to watch, because the Fed is they're rolling off their balance sheet, right? They're not going in there and buying more bonds anymore. And when they created all this buying pressure and depressed that 10-year interest rates. Well, I mean, we're like below 1% or something. It was a crazy cheap interest rate. And even now it's pretty orderly. We're not seeing that the 10-year is still below the 2-year. And I think everybody's mindset is, well, okay, it didn't happen this month, but eventually the Fed's going to pivot and go back down. And we don't know when that would be. We don't know how high it will get, and we don't know the terminal rate. So if the terminal rate is anywhere around here, where they have to keep it for an extended period of time, that 10-year is going to start ticking up eventually. But yeah, it's interesting. Right now, I think it's like just a little bit over 4% on the 10-year. Let's go to the earnings and see what's coming up on the earnings front. So I'm on earnings report, and let's go over here on this tab, full report, next 2 weeks. And here This is a list of stocks that are set to report earnings next 2 weeks. Okay, TSM, MS, Citi, Citigroup, PNC. So you could see some banks, Wells Fargo, JP Morgan, USB. This is their average daily option volume. And next to it, these are the dates they're expected to report. So this one looks like today, October 14th before market opens, October 14th before market opens, Bank of America, October 17th. So all of them are down here. Next to it, and we haven't looked at this report for a while. That's why I wanted to come back, because we're starting out with earnings. Next to it is the implied move, and that's based on the nearest term options that cover that earnings. Okay, so options with the lowest duration, but it has to cover that earnings. So obviously if you have an option that expires tomorrow and the earnings are October 17th, they'll go to the following expiration. And it's looking at that straddle and what is the straddle implying. So here, Morgan Stanley, right now, that straddle is implying to move up or down 5.5%. So when you're buying a straddle, is buying a call, buying a put, the stock has to move up or down by a big enough percentage to cover the cost of both the call and the put for you to at least break even or go higher. So that 5.5%, what does that mean? That's where the buyer or the seller break even. That's exactly their break even, right? 5.5% up or down. So above, think of it over and under. Goes above it, then it moves more than 5.5%. If it moves up 10% or down 10%, that means it moved over. So you would want to own that straddle. If it moves 1%, moved under, then you would have wanted to be short that straddle because then premiums will start coming in after earnings. So that's the implied move, or think of it as the over under for the percentage move on after earnings. So how does that compare historically? We'll take a look here. I'm going to just go down to the right, and we could compare for the last 4 quarters and last 12 quarters over here. So Morgan Stanley, on average, the move up or down in the last 4 quarters was 1.4%. The max move was 2.5%. And the minimum move 0.4%. Okay. And heading into earnings, the day right before they announced earnings, the straddle closed 3.8%. And some of these straddles right now are also pumped up because, first of all, we have the CPI numbers, markets are moving around, and you have other things going on besides the earnings event. Because now we got macro events, right? Economic events pushing the stocks around. So keep that in mind, that the straddles are reflecting other market moving events, because we had the CPI come out, and you could see how the market's reacting to that. We're getting, almost every CPI number, I think, that has been coming out, we've been getting at least 2% moves, right, in the market.
Well, it's the first time we've seen people waiting on bated breath around inflation in our lifetime. I mean, it's become a tradable event. What used to be an afterthought, maybe not even discussed, is now.
Nobody looked at this.
Yeah, I mean, I think the market was almost up 1% prior to that number.
Yeah, it was. And yeah, so the CPI now, obviously, and the interest rates, anything impacting the interest rates right now, you can see how sensitive the markets are at this point. Especially,
it sounds like you're a little bit underwater. You may want to move closer to the mic or fiddle with the mic. Or
is that better a little bit? No.
Can you plug it in? Plug it out, or
I don't even have the mic plugged in. Let me try to plug it in, because usually the problem is when it's plugged in. Try to plug it in. How's that? Will?
Yeah, it's still a little fuzzy. I muted to see if it was on my end.
Okay.
Maybe.
Sure.
Well, actually, you're good now.
Good. Okay.
Yeah.
All right. So yeah, we're talking about with the interest rates and the Fed at this point, we're going to go up, let's say another 3/4. We're at 4%. That's already in their mind restrictive territory. Any more we have to keep going up, the market's going to be very sensitive to it. The higher we have to go. And you mentioned that you think that they're talking about the 2-year having to go to 5%. Right now it's at 4.25, so you could see how much more we have to go. Let me actually, well, if there are no questions, I may end things earlier because I have an appointment to an eye doctor. I'm getting a new prescription.
Nice.
I forgot about that.
There was an interesting observation I just thought I'd mention because Rob mentioned. I think it's interesting. He's noticed that sometimes, well, I don't know how often, you'd have to come on and tell us, but he sees the crypto futures seem to be preceding the S&P moves. Like this morning, I guess the crypto futures were down in the pre-market when and the stocks were up. So
right, and that possibly because those markets have less liquidity, less, they don't have the same stops. They're trading, they're trading round the clock, right? So we have, market hours where a lot of participants can't participate until the market hours. It's possible that those crypto markets may be moving ahead of even the equity markets at this point, reacting to the news like that. So yeah, that's a possibility. I'll take a look at, I haven't thought about it, but it may be the case where those cryptos are moving ahead of the equity markets.
Yeah, there may be a little tell in there. Well, that was interesting information, Rob. Thanks for sharing. Dima, great job. You get your eyes fixed. We need you to have good eyes, my friend.
Yep. Yeah, and I haven't had a prescription change in a long time, so I gotta update the glasses.
All right. Awesome job. We'll see you tomorrow, everybody. Thanks, D.
Thanks everyone for joining. Stay safe out there. Have a great trading day. Hope